Okay, guys, we're going to start now. Thank you for your time. The session will pretty much go for around about 30 minutes, but we're going to allow a little bit of time towards the end for questions. So I'd ask you to hold off till the end of the session to fire questions away, because it just helps me with the presentation, obviously, grouping those all towards the end. And before we start, we'll just do a final sound check to make sure everyone's hearing that volume nice and clearly, and the visual is good as far as the presentation. So you should be able to see the disclaimer nice and centered in your Omnovia screen. So just if you can let me know that that's coming through nice and clearly as well, that would be fantastic, and we'll get underway. Excellent, thanks Donnie. So we've got a few members in the room, that's great. That obviously is what we wanted to see too. So just as a personal introduction, we're going to talk to you a little bit about the V2 Trend Trader, but more specifically we're going to be talking today about how our traders are achieving results and how they're actually doing that probably a little bit differently than you would expect. So traditionally, a lot of traders spend a lot of time and energy and screen time trying to get trades away and trying to trade in the market. I'm going to show you a slightly different approach, nothing out of the box, but definitely, or unusual, but definitely something that you will find interesting, we hope. And hopefully you'll have some good takeaways from this session as well. So who is GMT Futures? There's basically the directors Shane Fry and Luke Ferguson. My name's Shane Fry. I'll be doing the presentation today. Luke is really responsible for the business development, the funds management, the capital raising, obviously a trader as well, but he focuses primarily on that aspect of the business. And we work closely with private members to ensure that they have a smooth transition from potentially being an inexperienced or an unsuccessful trader into becoming a professional pro trader as part of our Pro Trader program. So the model we have, we believe is fantastic, because it really aligns you with a coach and moves you forward into a professional trading program. And we're going to talk a little bit about what the overall process of that is once you finish the program. But we've got 15 years of trading experience and system development experience. And yes, it is being recorded. Experience also is funds management and investment management. So we're going to show you a little bit about that process as well today. So it's not just about, look, we've got a system, but also the process of having a system and where you can potentially go with that as well. We've got a very, very good retention rate. Our members, we've got a 95% retention rate for our members, so that's exceptionally good. We really are very proud of that. And just as a bit of housekeeping, GMT Futures is really the domain name of Key Equity Education, so that's our company name, Key Equity Education. Okay, so a little bit about our specialist services. What we basically do is, as I said, we have a model that we've put together over this 15, 16-year period that we believe is a very successful model in the market, because through coaching, training, trading private equity accounts ourselves, doing prop trading, trading in managed accounts, we've been able to identify where the strengths and weaknesses are of this entire structure and put that together in a model that we believe works exceptionally well. And really it comes into these four or five components. Well, the center of it obviously is the trader. So we start with a trader coming into our program. We have live one-on-one coaching. So that's really the catalyst to get you going. I think that it's invaluable to have somebody mentoring you through the process, because when you're trying to get into the market and put all the pieces together to get something that works, there's nothing more valuable than having someone who's actually a professional trader who you can bounce ideas off, who can really kind of get you focused and put you on the direction that you need to go to become successful. Now, we also have a team approach. So part of our process is making sure that we have a collaborative approach with our system trading. I'm going to talk a little about our systems today, but one of the things that we do is, if we've got good systems, we have got good systems, but if we have traders who have got good systems, we share that information, because we know that the end goal for our group is to be collectively successful. Obviously, we'll have individuals who will be very successful, but as a group, we want to be collectively successful. So part of that too is making sure that one of the things we found out very early on is that the reason why most people don't make it in trading is because they're not objective in the way they trade. And very quickly we found that a very good way to eliminate a lot of the errors that people make and a lot of the issues that people have with trading is to automate strategies and make sure that they're objectively tested and automated so that execution is 100% objective and accurate. Now, when we've obviously, as that has grown as part of our business, we've seen that the results have improved as well, and we've definitely found that members are doing exceptionally well with this automated process, and we're going to talk about that. And we're going to talk about Scott today as well, because Scott's one of our members. He's gone through that process, and by following a process or a model we have and using that automation, it's really been able to result in some exceptionally good returns. So the other aspect of our business is developing a unit class managed fund structure. So if you're not too sure what that means, what that basically means is that we have the ability within our company to, if you're good enough, if your results are good enough, your track record's good enough, and you're trading according to the risk profile that we set up as far as the unit class or unit structure or the managed fund structure, then you can potentially be offered capital to trade. So seed capital and then move into obviously managing bigger funds. So if that's something that's, any of you potentially are interested or looking to do, then basically that will be something that is offered to our traders. The second part is building a track record. Scott has, over the last 7 months, basically been building a track record. He's been putting together, he's putting together his trading plan, his portfolio plan. He's set up his automation. He's been trading live in the market, and he's put a track record together of solid, consistent performance. You're going to see that in the results that he's done, and it's just using one system. I'm going to show you how he used one system to basically also diversify his portfolio as well. Regular weekly system training. So one of the things we do as well as part of the Pro Trader program and as part of the group that we have is that we want to make sure that everybody's trading with their best settings. They're looking at the top 10 systems. So one of the things we do is we regularly revisit these top 10 systems that we use, either Forex or futures, wanting our members to get obviously the best out of the process. So it's critical that we've got that information there saying like if you're trading, like for example, last week when we were in the room, we were talking about soybeans. And soybeans has been a market that has been off. It was performing exceptionally well. We turned it off because it went into a bit of a drawdown, but just recently it's been turned back on again and the settings have slightly changed and it's really performing well. So these regular weekly training sessions help us to just get across what systems are working well, what markets we should be looking at trading, what markets potentially we should be monitoring as far as volatility, whether it's good, bad or indifferent, because obviously there's different streams of volatility that you want to be tracking, and that just allows our members to be getting the most up-to-date information as far as their systems and the process. So there's some of the services we provide. Now what I want to do is I want to talk to you about improving your trading edge using automated trading strategies. Some of you may have used EAs before, some of you may have used full trading automation in TradeStation, Multicharts, Ninja, but I want to talk to you about the process of going through that and how that can definitely change the way in which you trade. But the first thing I'm going to do is I'm going to ask those in the room who have actually used full automation. So how many people full automation with your trading? So basically where the system is taking all the trades, you're monitoring obviously the performance of the system, you're monitoring the outcome of the trades, but you're actually not physically placing any trades. So we should get a reasonably interesting response here. So Stephen, yep. Kim, Richard, no. Okay, so we've got a few that haven't and a few that have. Okay, so some are keeping their cards close to their chest. That's okay. All right. So to us, I personally believe, and I believe this based on, I guess, 15 years of experience, that if you're not trading and you're not 100% objective in your trading, then you're wasting your time. Unless you're a veteran trader, then I think you're pretty much wasting your time in this game. So I think that you need to have a strategy that is 100% objective. The reason why I say that is you need to be able to objectively measure your edge. If you're subjective in your trading, then your edge can't be measured correctly. So to me, you need to be 100% objective. Now, the easiest way to achieve that is to automate the process that you're undertaking. Now, that automated execution and automated trading is a great way to maintain your objectivity in the market, to measure your results, to clearly quantify exactly what it is that you're doing on a daily basis, how your system's performing, whether it's got a positive expectancy. And the other thing that happens too with this process of automation is that it takes a lot of the guesswork out of taking the trade, the hesitation, do I trade, don't I trade? Your plan and your process and your strategy, if it's automated and 100% automated, then will take the trades regardless. So if you've got a trading day and you're ready to trade, then it will take the trades. Whereas if we're trading manually, obviously there's a lot of things that can go wrong as far as manual trading, and there are times when we'll be, won't be feeling great, or we'll be under a little bit of pressure, or we're feeling a little bit of anxiety, and that trade psychology and physiology kick in, and we get basically the amygdala kicked in, and we start to make bad decisions based on how we're trading. So we've got to be very careful about obviously making sure that when we go to trade, we're in a very good state of mind, we're relaxed, we're controlled. But what happens when we turn that switch to automation is that it takes a lot of the pressure off us, and it allows us to concentrate more on being good system managers, being able to manage our system and our process exceptionally well. And that's what we really focus on. We focus on, right, well, you've got a system, it's got an edge, it's proving itself. If it starts to not deliver the results that you're expecting, then you need to look at one of your backup systems. So it becomes a process of you becoming not a great trader who executes trades, but a very, very good system manager. That's the process we like to adopt here. The other thing we look for, obviously, is a good reward to risk. We want to make sure that our trades have got an exceptionally good reward to risk, because we need to maintain that positive expectancy. We need to make sure that we're winning more times than that our wins are greater than our losses. And the other thing we need to average trade net profit. So the amount of money we make every time we go into the market, that needs to be as high as possible, because we know that as traders we're subjective to slippage, commissions, and generally what we need to make sure of is that we have enough of a buffer there to make sure that our strategy is performing exceptionally well in the market. Money management and position sizing are really the key for us. They point to how we're going to grow our account, how aggressive or conservative, or how we're going to basically position size into our trades, how we're going to get that geometric growth once we start to get profit into our account. And one of the things we're going to talk about today is basically come back to, all right, if we're trading as a retail client and we're trading our own personal account, our money management's going to be different, isn't it? If we're trading in our own account, we're potentially going to be a little bit more aggressive. If you're putting a track record together for trading in a managed fund, then you're going to need to trade within the managed fund guidelines. So your risk may be, and the model we use is the 2% a day, 6% a week, 8% a month. So your drawdown can't exceed that. So if you're trading in a managed fund, you have to be very, very, very strict with your money management, to the point where you don't want to trade for 7, 8 months, 9 months, do exceptionally well with minimal drawdown, then one day you have a blowout of it, you're down 10% or 15%, because what you've done is you've basically sabotaged, or not sabotaged, but you've kind of gone outside of the parameters or the mandate for your track record for trading within a managed fund. So So obviously, depending on where you're at with your trading and what kind of process you want to go forward, you're going to that will determine how aggressive or what type of money management you're going to use in your trading. So the next thing obviously is maintaining a high performance system. Now, what a lot of traders do when they come to our program is they look at the systems and they go, great, look, we've got our top 10 systems, we'll just grab this one, this one, this one, and this one. Fantastic, we're away, we're trading. Encourage traders to do, and we train them in doing, is maintaining that system. It's not just a case of, all right, well, you've got a system that's been running well for 6 months or 12 months or 2 years. You've still got to manage that system. And what I mean by that is you've got to monitor whether, the days of the week are still profitable. Like if you're trading a system, it might only be trading 3 days a week. And the system I'm going to show you today, which is system number 3, which is our crude trading strategy, it only trades for 10 minutes a day, 3 days a week. Now, some of you might think, well, that's not a lot of trading. But if you apply money management and you apply position sizing to that, then you're going to see that system can grow and flourish and produce exceptional results. But it's all about making sure that if you're trading it 3 days a week, like Monday, Tuesday, Thursday, that Wednesday and Friday, you've still got to be tracking those days to make sure that if those days start to become profitable, you want to be turning those days back on. So it's all about not only just having the system but maintaining it as well. So, and we teach you how to do that. And and really what's happened is with Scott, and we're going to talk a little bit more about Scott shortly. The reason why Scott has done so well is because he's been very, very good at managing his system. It's not a difficult process, but it's a process. It's like anything. If you build a structure or you've got a structure in place, you need to maintain that structure. So if you just put something in place and you don't do any maintenance on it, then it's just going to eventually deteriorate, and it's not going to be. You're going to lose the value of that structure. So the same applies to our systems. So the question I get a lot of the time, or we get a lot of the time, is why do we have to complete a track record? Why do the members have to go through this track record stage? Well, as part of our Pro Trader program, they definitely need to complete a track record because what we do when we first go into this program is that we say, right, well, we're going to set some goals. We're going to set some 3, 6, 9, and 12-month goals because the program is very goal-orientated. So unless there's a goal set and unless you're aiming for something, then really there's no expectation that you're going to arrive at a certain point. So to us, it's important that you, a point in time or a line in the sand where we say, right, well, today's the day we start our track record. Today's the day where all this training comes together and we actually go into the market and we're trading in real time and we're actually performing as we should do. So the performance-based program is really designed around making sure that traders produce a track record. It may not be something that you take to, or move on to within a managed fund environment, but you may use it just for your own personal satisfaction, your own personal performance, your own consistency. Having that track record is really about stepping up to be a professional trader, and you need to do it in a live account. I mean, it's great to put together a track record in a demo account, but really at the end of the day, live trading is all that counts. And we do a process where we basically have a 20-day simulated challenge. Then once traders complete that, they go into the live trading track record. So we really take pride in making sure that you're making money because, as I mentioned before, it's a team-based approach. We're collaboratively sharing our information. We want to make sure that everybody's trading with the best settings, the best systems, because at the end of the day, if we're all making money, then everyone's moving forward and we're maintaining that positive outcome. Now let's have a look at Scott's process. So Scott's been with us for a couple of years now. He's stepped into the track record process about 7 months ago. So he went through that same process of the basic training, going through all the modules, the trade psychology, the money management, learning his system, learning the automation, applying that and then going through the simulated trading. And what happened obviously is that he's now built up a 7-month track record. So these results are from Scott's been kind enough to provide us with his real-time live account results. And what you're going to see here is you're going to see one way in which you can diversify your trading. So there's a number of ways in which you can start your trading off. You can start with obviously a single system with a single market. Depending on the size of your account, you can trade. You could potentially start with a single system with multiple markets, and we're going to show you how Scott actually started on a smaller account and built that up and using multiple markets. So let's take a look at his monthly results. What happened was basically, as you would expect, slow and steady wins a race. So starting off in March 2012, Scott's return was 2.69%. In April, April was a fairly. Now he was using the trend trader system, which I'm going to show you here in a minute as well. So I'm going to scan to. We'll go to Scott's trading statement, and we'll also have a look at the trend trader system, and I'll explain how the trend trader system works and why it only takes trades on very short windows, and how he's been able to use that system consistently over a long period of time. So you'll see here May 3.46%, June fairly consistent at 3.63%, July slightly down at 1.78%. So he hasn't had a negative month yet. August 10.6%, and then September 12.42%. Now what you'll see here is that what's happened to Scott is that in March, April, May, June, July, and August, July, he basically was trading crude oil. That was that 10 minutes a day strategy. So just delivering a nice, even result, nice consistent performance on crude. But then he starts to add in additional markets. So August, September, he starts to bring in. Firstly, he brings in the Eurobond and then the T-notes. So instead of adding contracts, he basically using a delta rate of increase. So he started to, instead of doing that, he started to add in markets to his account to increase his overall performance, overall net profit, and ultimately reduce his drawdown. So what's happened with Scott's process is that instead of adding contracts to just one market, he spread his risk by bringing in the Eurobond and the Russell. And what that's effectively done is that's increased his overall net profit. And you'll see that as he'll continue along and keep going, that'll apply even more. And what it's done is it's reduced his overall drawdown. So instead of potentially having, because with our traders, what we do is we basically ask them to look at the systems they're trading, and if they're going to add markets to that system, then they need to look at the correlation between the systems and where the drawdowns occur. So ideally what we don't want to see is we don't want to see a trader picking a system that has a drawdown in the same month historically. So we wouldn't want Scott to be picking, say the Euro futures that had a drawdown in June of last year, and his crude system had a drawdown in June last year, because basically he's just doubling his risk up. So ideally what we want is we want to make sure that there's a good distribution or diversification of risk across multiple markets. Now the next phase for Scott is that once he gets to a certain point of adding markets, then he'll start to add contracts. So what benefit do you think that has for the trader? If I'm potentially trading an account and I'm adding markets instead of contracts, so I'm trading one contract, I'm trading initially on crude, then the Eurobond, then the Russell, then I might add, say, the S&P, the Euro futures, I might add a couple of currencies. What effect is that having on my account as far as performance, do you think? Does anybody want to have a stab at that? Because typically what happens with traders is they position size horizontally, so they'll start with one market, they'll go to 2 contracts, 3 contracts, 4 contracts. But what we've found is that what you're doing is if you're adding additional markets, you're spreading your risk, And then what also happens is that once you get a great spread of markets, then you're also able to start increasing your contracts, but your account's grown significantly, and you can do that comfortably without being maxed out on a market. Because what you don't really want to do is you don't want to be all in on crude, max out at say 20 or 30 contracts, starting to get ridiculous slippage, and then think, right, well, I'm stuck now. I was making really good money on crude. I'm starting to get hit with a bit of slippage because I'm trying to get too many contracts into the market. What do I do now? What market do I test up now? So what we want to do is we want to say, right, well, when we're trading, we want to actually have that formula in place before we start, don't we? We want to say, right, well, this is my portfolio plan. I'm going to start with one contract. I'm going to start with crude. Then I'm going to go to the Russell. Then I'm going to go to the Eurobond. I'm just adding markets initially, so I'm getting that horizontal spread of risk. And then once I've got that spread of risk across multiple markets, then I'll start adding additional contracts to each market. So that really helps to spread our risk. And we'll go in and have a look at Scott's. As I mentioned before, we'll have a bit of a look through Scott's results, and then we'll spend a little bit of time having a quick look at the trend trader, and I'll explain how that works. So you can see here that that March just a nice easy 275. So nice and simple. I don't think he traded much in March at all. That was his first month of trading. April picked up a little bit more. He's only trading 10 minutes a day, so he's not getting a lot of trades, as you can see there. Not a lot of trades going through, but again, profitable. May, you can see the trading starts to pick up a little bit more. We get a little bit more activity on crude. He's got a full month of trading again, and you can see there that that the performance is around about the same, picking up again. Then we go to June, and we're still on crude. Not a lot of trades. Again, he's trading 10 minutes a day, so we're not expecting him to get too many trades if he's trading 10 minutes a day, 3 days a week, because that system number 3, which we talk about, is really, that's all it's doing. 10 minutes a day, 3 days a week, and he's almost knocked over $1,000 there in just that one system. And remember that his delta rate of increase, or his market rate of increase, was at $1,000. So once it hit 11,000, he was adding another market, and you can see there that July, again, still on crude, not a lot of trades. So these are the system taking trades. This is all being automated. So this is where Scott jumps up to, in August, jumps up to another market. You can see the Eurex is added, or the Eurobond I should say, and he starts trading a second market there, which is fantastic. And the net result of that is that he pushes his account right up there, so $7.99 profit at the end of that month. So adding that second market really kicked his account on. So then we come into September. So we're expecting that September may yield another market, so let's watch for it. So we've got crude and the Eurobond trading. Now the Eurobond's only trading 2 or I think 3 days a week, so he's basically got 6 full days of trading, so he's not really trading a lot in relation to his account. You can see he's got the crude contracts, the Euro contracts going through, Eurobond, and his net result for September coming out, and he starts to, this is where we start to get some Russell trades. So probably about, you can see the big $1,000 winner there. Halfway through this process, Scott basically gets to a point where he's going to add another market. So he gets a good increase in his contracts. He's up to 3 markets, and he decides to split his account. So he takes $5,000 out, split the account up. So now he's trading the Russell, crude oil, and the Eurobond, and he's split his market up, so he's got a cross-margined account. And that's what some of our traders do, because some of the traders will use, say, potentially 2 crude systems. And what they'll do is they'll say, right, well, I'm going to use two crude systems. I can't trade them both in the one TradeStation account. I'm going to have to split that account. So we set up sub accounts, and then basically, because as you can imagine, crude oil is one of the bigger markets as far as opportunity. So there are a number of systems that are trading crude and a number of time frames, and we want to take advantage of those. And you'll see that when I go through the example. So that nets out. So his activity this month, he's up 1996. He's obviously had that $5,000 come out as well on a transfer. So basically that's Rutherford's results for that 7-month period. So Scott's next step is to obviously add an additional market. So he's looking to, once he gets to 6 markets, then he's going to start applying additional contracts to each market. We'll just click out of there for a second. I'll take you to the TradeStation screen, and we'll have a look at the system itself. Now, we're firm believers in making sure that you keep things very simple. So you can see there Scott's process was simple in that he'd already decided exactly how he was going to grow his account. He was going to grow it horizontally. He was going to add markets instead of contracts, and he was going to make sure that he did that at a certain rate of increase. When that rate of increase hit his account, then he'd add another market. So basically spreading his risk. Now the system he used was this was the first system, which was the crude 55 tick, and we're trading this from 9 to 9.10. So if I go into this strategy now I'll just give you a very, very quick look at the system as far as, and there's plenty of videos on our YouTube site. If you want to have a little bit more look at the systems, you can go onto the YouTube site. I think there's about almost 400 videos uploaded there. So you'll definitely see a lot of information about the systems, how they work, the types of stop losses we do. So if you really want to get stuck into learning more about the system, that's what we teach you obviously as part of the program. But just as a basic, we've got dynamic support resistance here. So this allows us to track obviously where potential breakouts are occurring or where we're looking to take trades. I've got our MACD Bollinger Band indicator down below. We don't typically use that all the time in our trading. That's a new filter that we're adding to our exits more than our entries, but some of our entries potentially. And on the chart I've also got the system performance tracker. I'm going to show you that here in a second as well. But basically it's very simple. Once we get a break of support, so support being the green line, you'll start to see these bars print white. So that's for a short, and you can see there that picks up a nice little short. Now there's a number of different stop strategies we use. We use an initial fixed stop, and then we'll use either dynamic resistance stop, so trailing the stop down. We've got our TP or take profit stop, which tracks the market down to its to eventually get taken out. But basically what we're looking for, a short setup is when price breaks support and we get a good run through. We need to clear that by at least a brick. Some settings are 2 bricks. And then a long setup would be if price breaks resistance and we get these cyan candles, then we'd look for a long setup. But what we've found is that from our testing and in our analysis, there are certain times of the day when crude trades exceptionally well. And these times of the day have been very consistent for a number of years. So what we've found is that one of the time slots, and one that Scott used, was basically the 9 to 9.10. So this particular strategy, and I'm not sure if everyone's familiar with TradeStation, on TradeStation, and you can see here, this is how the automation works. Basically, we've put in here exactly what trading time we're going to trade, 9 to 9.10, and that's all that this system will take. It'll only take trades that set up between that time slot. It runs a 16-point stop. It has a 4-point trail off those red dots for a short, and basically that's it. And you can see here, if I scroll down on this strategy report, it's only trading Sunday, Thursday, Friday on this particular system. So it's trading, this one's only trading 2 days of the week. And for this particular, this is only trading the short side on 2 days of the week. On the long side, if we go into the long side, it's only trading Tuesday, Thursday, Friday. So the reason why we do that, why do you think we're picking out a long and short bias on these systems? Well, the reason why we are is because we clearly know from our system performance tracker, which I'll bring up here now. So we'll go view, we'll go to our data window. We know exactly how our system is running every time we load our system up, and this is just being a little bit temperamental. We know exactly how the system's performing, the average trade net profit, the max drawdown, the equity that it's produced, the average trade net profit after it's produced after it's on or off, and the overall max drawdown. We can tell exactly what each of the days of the week, longs and shorts, are making. Now I've got some of these days off, obviously, but if I go to Tuesday, I can see that Tuesday's current drawdown is only $315. Its equity is $175. I can go to Thursday and I can see that Thursday is obviously a good trading day. It's got an average trade net profit of $54. Its maximum equity has been $2,300. Its current equity is $1,970 and current drawdown is $335. So I can really get a good picture of exactly what days are working well and what days aren't. So if I turn all of the days on, then I'm going to see what is happening on these other days as far as performance. I get a very quick snapshot, and then I can make decisions based on whether is that enough of an average trade net profit for the system I'm trading, or do I potentially need to turn this day of the week off and add another day based on my assessment. So what it allows us to do is it allows us to look at the days of the week, and it also allows us to break down the days, the longs, and then also go in and look at the shorts as well. So we can look at Monday shorts, Tuesday shorts. Obviously they're off at the moment, but if we have a look at Thursday shorts, we see that current drawdown there is 255. Let's have a look at Friday. So Friday shorts is one that we're definitely going to be turning off because it's not making enough money. Average trade net profit is $11. So Friday shorts is definitely one that needs to be reviewed because its current drawdown is $420. It's only got a profit of $50, so it needs to potentially be changed or modified or turned off. So guys, that's a very, very quick look at our system and a bit of the process. As I mentioned before, this is a lot of the stuff you learn obviously as part of the program and as part of the process we take you through. But it's all about using, the best settings, tapping into what other traders are doing as far as their results, their performance, so taking the top 10 systems. And if we have a very, very quick look at our top 10 strategies, and I'll just pull this over now, you can see that, if I just widen this out a little bit, that our systems here, and I'll just do a quick, you can see that the systems are, this is for the last 12 weeks of trading, so you should hopefully be able to see that clearly. You can see that system number 3, trading 10 minutes a day, has knocked about $3,500. We have one of the better strategies running for about an hour a day, the Russell 64. That's knocked out about 8,225. So this is the information that Scott will be using when he's looking at his systems. He's saying, right, well, okay, I started with crude. He added the Euro bond, which he's now turned off because it's gone into a little bit of a drawdown. But what he's done is he's replaced the Euro bond with probably one of the best systems, which is the Russell. Then he's also going to be adding system number 70, which is basically the other crude system that is absolutely flying. That runs for about 50 minutes. So you can see there that if one of these systems potentially turns off, then he just goes to his list of top 10 and says, right, well, what am I going to access next? What's my next system to integrate into my process for the portfolio? What do I bring in? What do I substitute? So when I spoke about at the start of the session about making sure that when you are managing your systems, you want to be, it's almost like being a coach of a team. If you've got someone in your team who's not performing, as you can see, the Eurobond 144 was definitely started to struggle and hit its drawdown, we just turned it off or sent it to the bench, and we draw on one of these other players or systems to come on and fill the void that system leaves. So we definitely want to make sure that we're capitalising on, and this is part of being in a group and part of being part of a team. You're collaborating with other traders. You're not trying to reinvent the wheel. You're not doing all the hard work yourself. You're not sticking with one system, and when that stops working, what do I do next? You're actually falling back on, the support of your team and saying, right, well, all right, or your coach and saying, all right, Shane, well, obviously the Eurobond's not working. What's my next option? Well, funny you should say that, because the Russell is flying. That's one thing that you want to potentially add to your systems. And you've also got wheat that's coming along beautifully. So this system here is starting to pick up nicely. And there's a number of systems that are really kicking along. So this is the value of having this this approach to automated trading. So what we're going to do is finish off now with, obviously, this is what you get when you come into the program and you pick up one of the systems. You get access to the weekly What's Hot sessions. Why is that critical? Well, if you don't really have to do all the work, obviously traders manage their own systems, but we have the group maintaining the systems and making sure that we're looking at what's hot and what's running well. That is a huge advantage to trading within a group. Technical support is one of the key components of what we provide. We have a team approach to trading, as I've already covered. 30-day access to the live training sessions twice a week. So not only do we do the What's Hot sessions twice a week, but we also have additional training on optimization, automation. There will be different elements that we'll cover every week just to constantly improve your knowledge base around the systems we're trading and the overall and your overall market knowledge. Free system upgrades includes a monthly membership. So this is great, because what we've done at GMT is we've actually created a system library. So for traders who come in and are a little bit more experienced, who want to potentially not just want to have the trend trader, which we've spoken about today, but if you want to tap into, say, potentially the cycle trader or the counter trend or the reversal, then you can buy a number of systems. And if you decide, right, well, I'm trading the trend and cycle, and I've also got the reversal system, but you've bought out this new momentum strategy, and I want to change my system, well, you can do that as part of the system library. It's just a matter of letting us know, and we swap the system with you. So it means that once you own a number of systems, you can change them whenever it's usually about 2 to 4 times a year you can ask for a change of system. And that's a great way of basically just making sure that you're trading the best systems and that you've got the best markets that you're trading as well. So let's go into the V2 automated trading pricing. So the V2 trend trader system, in the track record that we showed you today, which is the crude, the Eurobond, is the cost of that, which is basically the full automation and automated back testing as well. So those systems will automatically back test for you as well. That's at 4995. Now that's the process Scott's taken. That's what's helped him obviously change his story over the last 12 months. Just having that process, being part of a group, being part of a team. So guys, whether you obviously join our group or whatever your next step is, I would strongly encourage you to definitely look at automated trading. I would definitely encourage you to work as part of a team, align yourself with a regulated company, someone that has a full license, and someone who is able to produce and show you real-time results, and someone who basically offers potentially that ability to have a coaching mechanism within their process too. Because really, to me, if you haven't had success to date, or you've had sporadic periods of success, or you're finding you're up and down, then really you owe it to yourself to basically put your best foot forward. Try to get into that space of being an objective trader, and making sure that you change your story. You don't want to be someone who's screen watching, 8-10 hours a day. That's just a waste of time. To me, the more time you spend in front of the screen trying to find trades, that's really time you're spending away from your family and your friends and doing the things that you want to do. So trading is an opportunity for you to obviously improve your lifestyle and improve your position in life. But you've got to really be realistic about how you're going to get there, and also to make sure that you have a plan in place. And you can see from Scott's story that he's put together a plan. He's put his portfolio plan together. He's got a team working with him, and that's really the key. That's really been the key to his success. Making sure that he has a team, a plan, and that he moves from being a subjective trader to an objective trader. So guys, that's really what I wanted to cover off today. If you would like to get some more information, or you'd like to directly purchase one of the systems or the system, please feel free to send an email to info@gmtfutures.com. I think Luke will be putting it into the chat box there. But we've got a lot of members in the group anyway. So the great thing is we've got guys in this group who are actually part of our team. So you've got Donnie, some of the guys. Stephen is actually one of the ones who is actually working, obviously, and going through that process. So that's fantastic. So it's really good to have, as I mentioned before, to be part of a team and to be included in what's happening as far as results and moving forward. And it's always an advantage when you're trying to kind of put together a model of success. So guys, thank you for your time. Any questions before I wrap it up? So any questions in relation to Scott's story? Did you want me to touch on anything in addition to what he's covered? Good. Okay. All right, traders, thank you for your time. Enjoyed kind of taking you through Scott's stuff, and I'll be probably doing a few more of these in relation to some of our new traders. We're going to have a trader of the month every month. So we've got some guys who are doing some really, really good work in GMT, and we want to share and encourage those traders because they're doing exceptionally well. I look forward to catching you for the guys who are in a live session tonight. Look forward to seeing you there. So that kicks off at 9:30 Australian Eastern Daylight Saving Time. So thanks for your time. Cheers.